The economy adding 313,000 jobs in February. Shawn Cruz is here from TD Ameritrade. Shawn, what's your reaction here?
This is definitely a strong jobs report. What was interesting was that even though the job report came in well above consensus, you actually saw the unemployment rate remain relatively unchanged, and that was because you had a lot of workers coming back into the workforce. So that kept that unemployment rate right there at 4.1%. I think a lot of economists were expecting that tightness in the labor market to push that rate a little lower, but we got a little bit of stability out of that number.
Because we were expecting 205,000 jobs to be added, and we got 313,000. But I think the key number here is average hourly earnings, only up 2.6% year over year compared to that 2.9 number we got in February, which caused the markets to go haywire. What's your reaction to the wage growth here?
I was expecting that bounce back just a little bit because we saw a lot of weather effects in the last report that kind of showed you that work week went down, and that the math there is going to cause that average hourly wage to spike up a little bit. And I think that gave a lot of people some sort of an inflation scare, which triggered a little bit of volatility in the market. But I think this coming in a little bit on the lower end of consensus estimates might give everybody a little bit more of a feel that there's going to be more of a gradual increase in some of these, in the wages and in prices, and I think that's going to stabilize markets a little bit here. I think if you would have seen it overshoot to the upside, that could have introduced quite a bit more volatility, both in treasuries and by extension what we saw last time in equities.
So is the Federal Reserve still on track for 3 rate hikes this year now that we have this second report here?
I think so. I think everyone was expecting the 3 rate hikes. I think the last report made everyone wonder, is the Fed going to have to actually start tightening even further, even faster, if we really do see wage growth take off and that spills over into inflation increases? Because I think everyone was starting to wonder, is the Fed going to get behind the curve in terms of dialing back their accommodative monetary policy with inflation really skyrocketing?
Yeah, and we have a key Fed meeting in just about 2 weeks, Jerome Powell's first press conference. Obviously, the markets will be watching that. Give us your stock market outlook now that we have this latest round of employment data. Are you changing your strategy at all? What's your advice for investors?
I think right now this shows that the underlying fundamentals of the U.S. economy remain intact. It remains strong and intact. So I think that was a story going into this year, and I think that hasn't really changed. So I think right now it's really going to be a little bit more of some of that political headline risk that investors need to be wary of. And at TD Ameritrade, we've seen our clients move in to maybe some of the lower beta names, just while we work through a lot of this volatility.
Yeah, any names specifically on your mind?
I mean, we always see Apple as a very popular name. We actually saw them move out of Facebook, which they had held quite a bit, and it was always very popular. And we also saw GE was a popular buy, and I think that was just on weakness. TD Ameritrade clients saw that as a buying opportunity, and we saw them rotate out of some of those IT names as that made a pretty strong recovery in February. We saw profit taken from TD clients.
All right, Shawn Cruz from TD Ameritrade. We'll leave it there. Thanks for joining us.
Thank you.